Hi everyone! For today we will be explaining about the terms and glossaries to know for StockHero. Before that, please subscribe and click the bell icon to get notified when we post a new video. If you have started to use StockHero, you may be wondering what is a deal or what does win-loss ratio mean? In this lecture, we will go over the common terms found in StockHero. Understanding these terms will help you to use StockHero better. Now, let's start with the first term. The annual percentage yield, or APY for short, calculates the return of an investment over a 12-month period, based on compounding interests or returns within the same period. For instance, if a bot that has been operating for 6 months and has an absolute 25% return, the starting capital being $1,000 and ending up with $1,250 as the final balance, the APY would amount to 56.25%. Generally speaking, the higher the APY, the better. But having a high APY does not necessarily mean the strategy is good, as returns can be skewed by a sudden large increase in profits within a short period of time. In our opinion, a better metric would be the win-loss ratio. A good strategy should consistently deliver above-average profits. More on win-loss ratio later. Next, you always hear about the term bot. What exactly is a bot? A bot is a software program that consists of a set of algorithms that reads market data and automatically executes buy or sell orders based on the entry and exit conditions set by the user. In StockHero, all bots are deployed on our cloud servers. You do not have to run any software on your computer and incur expensive hardware and electricity costs. All these costs are borne by StockHero. When an entry conditions are met, the bot will create a deal. A deal comprises a set of trades and is created together with the first trade once the entry condition is met for the first time. Check out our video that explains deals in greater detail. Fund allocation is the maximum amount of funds that the bot will use to buy stocks with. The bot will not use more than the amount set in the fund allocation. However, do note that if you have connected a broker with margin tagged to it, the bot will ignore the fund allocation amount and let you set any amount for the fund allocation. Please take note that margin trading is risky. Consult with a professional before you start on margin trading. Next, we shall talk about the base order and extra order. Base order limit determines the amount of fund used to execute the first trade. It is a percentage of the fund allocation. For example, if a user sets $1,000 for the bot's fund allocation, and configures the base order limit as 20%, then the bot will use 20% of the $1,000, that is $200, to execute the first order. Extra orders refers to the number of subsequent trades that the bot will execute after the first trade. If the base order limit is set to 20% and the number of extra orders is set to 2, each extra order will end up using 40% of the remaining fund allocation. When a deal remains open, the user can manually instruct the bot to ignore the exit conditions and immediately execute a sell order. This is known as liquidation. Once a deal is liquidated, the deal is considered completed and the bot then resets itself. After resetting, the bot will proceed to create a new deal based on the entry condition. StockHero tracks the win-loss ratio based on all of the completed deals. For example, if all of the deals turned out to be profitable, then the ratio is at 100%. If you have 5 profitable trades out of 10 total trades, then your win-loss ratio is 50%. A bot that delivers a high win-loss ratio is a strong indication that the strategy is consistent. For some traders, a high win-loss ratio is a better indicator of a bot's performance than the annual percentage yield. One of the most important keywords to understand is the trading frequency. The trading frequency defines the maximum time interval that the bot will read the live market data. If the frequency is 15 minutes, the bot will read the market data every X minutes, where X is less than 15 minutes. So, a 15-minute frequency bot will read the market data more often than a 4-hour frequency bot, and because of this, the 15-minute frequency bot will trade more often as well. Trading frequency is related to risk. The smaller the trading frequency, the greater amount of noise the bot will read. Hence, a bot tends to execute a trade much earlier if the frequency is at 5 minutes versus a bot set for 4 hours frequency. So, as a trader, you will need to know your risk-reward profile well and deploy a bot that suits your profile. Okay, we are now at our last definition, backtest. What exactly is a backtest? A user can choose to test the efficacy of a strategy by running a backtest on the bot's settings. Hence, backtesting allows the user to check if the bot's performance is good enough before deploying it onto the real market. Thank you for viewing this video. We hope you will gain a clearer understanding of the various terms used in our StockHero app. Contact us if you have any questions. Don't forget to visit our StockHero at www.stockhero.ai.